Yeah, I think the most important thing that, in my opinion, will eventually, what right now, assume everything Optimum is doing is super successful, and we go from this market, which maybe is 5% to 15% inefficient, and we're able to shrink that to 10 basis points or 0.1% inefficient because people are having to shave their bids less, they're having to shrink their blocks less. There's more consistency in bandwidth in the network, more consistency in latency in the network. Um, and I think what I'm sort of excited to see is how do these kind of latency marketplaces financialize on the next level, which is, will people start selling, you know, futures on future block latency? So like, hey, I don't really need, I'm a validator who I'm going to be selected. I know I'm going to be selected in the next 2 minutes and at least X blocks. Is there a way for me to hedge some of my risk, or kind of ahead of time sell some of the rights to this auction early? The reason I bring this up is, you know these types of futures markets also make things a lot more efficient for users, especially users who have very planned regular transactions. So an example of that is an oracle. So an oracle might be a user who's conveying a price from an off-chain venue to an on-chain protocol, and they're trying to have as little latency and bandwidth variance as possible. They need to tell you the price of the S&P 500 every second, or every minute, let's say, between 9 a.m. and 4:30 p.m. But then after that, they don't need to bid. So they have a very precise sort of bidding frequency, and you could imagine that they're willing to pay ahead of time to guarantee sort of being in the top X of latency. And so I see a lot of this infrastructure evolving as traditional entities start moving into blockchains. Blockchains are continuous time repeated games like we've been talking about. And a lot of the off-chain stuff, traditional finance, brokerages, tokenized assets, etc., don't follow that. And the way to make those two worlds work is to just reduce the variance and spread between them. And I can see these products kind of pushing us in that direction.